Hey friends, I'm Michelle Markey, and today I'm going to share the best high yield interest bank accounts as of July 2022, because even a month ago, a lot of banks were still only offering about 0.5% in interest, whether it was in a checking, savings, or money market account. A lot of banks were just not giving us that high of interest yet. But since the Federal Reserve has been hiking their Fed funds rate, that means that banks can lend to each other at a higher rate, and it's also encouraged them to give us as consumers better interest rates so that we're willing to leave our money in their vault, whether it's online or in a physical vault. But either way, we as consumers are finally starting to reap better interest rate rewards. So some of the ones I've come across, and I've gathered about 30 accounts, is there's a range of 0.15% to as high as 5% in interest. So I'll tell you what all of those are, as I've gathered them from sites like NerdWallet, Investopedia, and Bankrate, and none of them sponsor me, and no accounts are sponsoring this video. So this is just from me doing research of what's available online. And if you also appreciate trying to get the highest interest rate for your money, I hope you'll like and subscribe to my video and YouTube channel, because I'll tell you what you can take advantage of, and also the things that I look out for, like trying to get the least amount of fees and strings attached. So thanks. And so whenever I go to open a high yield account, whether it's a checking, savings, or money market account at either a bank or credit union, ideally I like to make sure that there's no minimums to open the account with, or no minimum daily balance, or no monthly maintenance fees, and also no overdraft fees, and plenty of free ATM machines like Allpoint or other kinds of networks to be able to withdraw from, and also that there's an easy enough way to deposit cash into the account, because some online banks can make it a little bit hard to deposit money into them, and then some third-party vendors charge a lot of fees for actually depositing cash into them. So that's kind of not fun. So you kind of can't have the best of all worlds without sacrificing yield sometimes, especially with online accounts. But one good example of this is Ally Bank, where they have no monthly maintenance fees, no minimum deposit to open the account, no overdraft fees, and whatever fees they do have, they're very clear about them. And they also compare themselves to a lot of the typical brick and mortar banks like Bank of America, Chase, and Wells Fargo. And you can see that Ally Bank is giving a 1.25% annual yield in interest compared to the 0.01% that B of A, Chase, and Wells Fargo are giving. So even though sometimes it's nice to have some brick and mortar banks lying around so that you can do some easier bank transactions with them, with the advent of mobile banking, there's a lot less need for these brick and mortar banks. So the only caveat I will add is that sometimes the brick and mortar banks give you nice opening bonuses. Like right now, you can still get $200 to open a Chase checking account, but there are some catches to that, where you either need to be having direct deposit of $500, or having a minimum balance of $1,500, and also maybe having a combined $5,000 over all of your Chase linked accounts. So it can be a little bit complicated if you want to avoid the $10 to $12 monthly fee with Chase. But getting the $200 opening bonus is like getting 13.33% in a year if you only have to have a balance of $1,500, and you get 200 divided into that, gets you about that 13% interest yield right off the bat. But that would be only one time, and it's not like forever. So even though there's some pros and cons to the brick and mortar banks, for the most part, I'm going to be emphasizing a lot of the other kinds of bank and credit union accounts that don't really give the opening bonus, but give you a higher yield, like at least 1% in interest rate across different kinds of savings, checking, and so on kinds of accounts. And another important thing that you should definitely confirm with any bank or credit union that you open an account with is to make sure that that account is FDIC insured, which means that it's covered by the United States government's Federal Deposit Insurance Corporation, or FDIC. And that means that your money is secure up to $250,000 in that given account. So arguably you could have $250K in one bank account, and then have an account at some other bank or credit union million and you're covered if you have another 250K there for a total of $500,000, let's say. And so it's a good idea to make sure that banks definitely have this going on, because that's how you avoid bank runs like what happened during the Great Depression in the 1930s, when a lot of people panicked and quickly wanted to get their money out, and then they couldn't because banks just didn't have enough money. And even though we're seeing some of that these days in another kind of digital asset, for the most part, American banks are pretty safe. So you can feel pretty assured that your money is safe in most banks as long as they're FDIC insured. And some good examples that show this on the website very prominently include Redneck Bank. So you can see with the horse, he's showing that it's FDIC insured. And also they indicate that you can get 1.85% interest on balances up to $10,000. But if you have over that amount, then you get 0.25% on the remaining balance. But also another one is T-Mobile Money, which is actually Customers Bank based out of Pennsylvania. And they give you actually 1.5% on all balances, regardless of how much. And if you're a T-Mobile wireless cell phone customer, then you can get actually 4% on up to $3,000 in that account. So between both T-Mobile and Redneck Bank, they seem to be offering pretty good kinds of bank accounts. And you can see that they're both FDIC insured. So just keep that in mind whenever you want to invest your money in some of these bank accounts, so that you're getting hopefully a good balance between high interest rates and also making sure that they're secure. And as promised, here's the list of 30 or so high yield interest accounts, ranging from the whopping 5% if you meet certain conditions with the Varo Bank savings account, all the way down to the Charles Schwab Bank high yield investor checking account, giving you a measly 0.15%, which probably shouldn't really be on this list, even though they put high yield in their name. But the one nice thing about Charles Schwab Bank account is that they have no fee ATM withdrawals all over the world. So that's one plus, even though you're not truly getting a high yield out of this type of bank account. But for the most part, most of the accounts on this list are giving you above 1% in high yield interest rates, ranging mostly between 1.2 to 1.65%, and the median is 1.5%, with the average being 1.8%, because a lot of the credit union accounts on this list are giving you between 2% to 4.25%. So that's pretty impressive, as long as you also meet their conditions. And just to example some of these that I tried reading into a little bit, what are some of the strings that are attached to them? Like if you really wanted that 5% from Varo Bank, in order to get that, you would need to receive at least $1,000 in total qualifying direct deposits. Your balances can't drop below zero at the end of the month, and your savings account balance can't rise above $5,000 at the end of business on any day. And also, if you don't need that 5% APY, then you can also settle for 1.2% when the conditions aren't met with Varo, at least. So that's a pretty decent deal, because according to NerdWallet, the national average for savings accounts is just 0.1% APY. So you're definitely still getting a decent deal with Varo, even if you may not meet the conditions entirely to go for the 5%, but definitely make sure you check out all the pros and cons if you go for that kind of account. And the next one is actually La Capital Federal Credit Union that I wanted to talk about, which, even though they're based out of Louisiana, you don't need to be a resident in Louisiana to go for this kind of account, because they're giving you 4.25%, and you maybe have to just donate something or do some kind of minor condition in order to get this kind of checking account. But it seems pretty decent if you can get 4.25% on balances up to $3,000, and then you get 2.67% from $3,000 to $10,000 of a balance. But then if you have over 10K, then you're only going to get 0.1%. But the weird thing that I don't really like about this is that it says that 15 debit card transactions are required per month. And then there's also a few other conditions that may not be the most useful to me. So I don't know if I would actually go for this kind of credit union checking account, because it seems a little bit restrictive and onerous. And then there's also what Bankrate has in the CIBC Agility Online Savings Account, which is giving you 1.66%. And the only weird thing is that it has an ATM access limited to 3 states only. So that's a little bit discouraging, because if you don't live in one of those 3 states, then that's kind of a drawback. And then also this account requires $1,000 minimum to open, but there's no requirement to maintain that balance to earn the 1.66% APY. So comparing these types of accounts to other options, what I would probably do is just go for the one that has the lowest amount of burden while giving you the highest amount of yield. So this will definitely vary on preference from person to person, and definitely make sure you read up on all the fine print on all of the websites and also some of the review websites, whether it's on Bankrate, Investopedia, or NerdWallet, and make sure you know what you're getting into before you sign up to any of these accounts. And one quick note, if you're interested in CDs or certificates of deposit, which means you're lending money to a bank or credit union for an extended period of time, is you can get sort of decent interest rates of between 2% for 1 year to about 3% for 3 to 5 years of a term commitment. But in reality, those rates for those terms are not as attractive as some other offerings these days, where if you're willing to have a Series I bond from the US government's Treasury Department, you can actually get right now a 9.62% yield on the Series I bond between now and October 2022. And that's still a pretty good rate. And even though that rate is going to change every 6 months, if inflation remains high, that's actually a way more competitive deal, as long as you're willing to keep your money there for at least a year, because 1 year is the minimum amount you actually need to hold the Series I bond for. And there's a little bit of a penalty for withdrawing it if you hold it for less than 5 years. But comparing that to a CD where you'd be locking up for the same amount of time, between 1 to 5 years anyway, I think that a Series I bond is way more appealing than a CD. So just as a heads up, in case you were wondering about CDs also. And it feels like Christmas in July, with bank interest rates finally starting to go up from their rock bottom amounts, where the last time we'd seen interest rates at these levels was back in 2019, when they were around 1.5 to 2%. But that's when inflation was only at about 2%. And now CPI inflation reached 9.1%. So we're ultimately still losing about 7.5 to 8% against inflation right now. But it's sort of a relief that we're finally getting some interest back. And I have a feeling that it will go up some more, because the current Fed funds rate is at 1.5 to 1.75%, and most likely the Fed will raise rates by another 75 basis points to make that range go to between 2.25 to 2.5%. So if that happens, I think that will also be good news for consumers, and hopefully we'll start seeing more bank accounts offering above 2% in interest, if not way higher, like some of those credit unions are doing. And so maybe it will become more normal again to see everyday commercial banks offering us 5%. And even though we might still be a ways from that amount, in order to bring down inflation, the Fed is going to have to raise interest rates. So I hope that more good times are ahead for consumers in terms of trying to get more interest for our money, which is losing purchasing power every day. And also, what's your favorite bank account? Let me know if you have a favorite high yield bank account, whether it's one I talked about or another one that's not on my list. I'd love to hear from you. And if you enjoyed this video or learned something, please like and subscribe. And I wish you well on your journey to getting the most interest you can on any and all of your bank accounts. Till next time.